From time to time, you may get the itch to take a trade before the market even opens in the pre-market. A lot of trading platforms, however, may restrict this. But in this video, we're going to talk about why you maybe should take a trade in the pre-market. More importantly, all of the reasons why you might want to avoid trading in the pre-market, because it does introduce a lot more risk into the situation. Let's talk about why, guys. We'll touch on a number of things here, but when it comes to pre-market trading, there's a number of different aspects that everyone needs to be aware of.
100%. And like you said, not everyone has access to the pre-market. Of course, we do here at Day Trade the World, and we'll trade live on our show during that pre-market. So what is the pre-market? Now, everyone's usually familiar that North American markets, the NASDAQ, the New York, and formerly the AMEX, open at 9:30. So if I pull up a chart here, and I have volume just because it'll be sort of obvious, you ask yourself, when is 9:30? This is where volume starts spiking. This is the open. And then using a previous day session to illustrate a point, the market then closes at 4 o'clock. But what is all this, you say? All of this trading that happens on AMC going all the way back in, to the AM, 5, 6 a.m., 7 a.m., there's actual volume going through. This is what's called the pre-market. Now, a lot of traders, like we said, do not have access to this. Depends on who your broker is going to be and what they allow. So there is less volume that trades at that particular time. That 9:30 is the official open. This is where you get things like the open and the close, and on your daily chart where those candles are going to start and stop. And then when people reference percentage moves on an individual day, they're referencing the open and the close price, because you have liquidity events, an opening auction, and that's a nice signal that the trading has started. A lot of institutional trading will happen after that open. So pre-market is all the trades that happen before that time. Even firms might start pre-market trading at 8 o'clock to 9:30. Some brokers will allow 7 a.m. There are others that will allow even earlier than that. All of this is encompassed in pre-market trading. Most important aspect of this, and we'll say it off the bat, because 9:30 is when everybody can start trading, there is less volume and less liquidity available before 9:30 in the morning, which can make trading at that time a little bit more tricky and risky, but at the same time, where those predatory algorithms a lot of times not there, Sean.
I love that word, predatory algorithms. Yeah, a lot of them don't switch on. I mean, a very, very good point there to talk about that. But, when do we want to, trade? I mean, there are going to be opportunities out there where you're saying to yourself, you know what? I want to get in because, I don't want to miss it. There's something called FOMO. And I think in the pre-market, we all sit down, we get ready to rock and roll, we grab our coffees, we do our little routines, and then we say, okay, now let's start looking for opportunity, right? And then sometimes it's hard to keep your hands off the keys. And I've known that for myself as well. The one thing you have to look for is volume. If you don't have volume in the pre-market, then nothing's going to happen. BlackBerry today, again, a stock that you want to watch. There's tons of these kind of stocks playing out today. Neil just talked about AMC. But this is the thing. When you come up and you see key levels, and especially at key price levels, right? So not only is this a pre-market top here, maybe I'll zoom in just a little bit more and go over here. So here's the pre-market right here. I only started charting it from 7:30 a.m. I don't like to look all the way back. There's a lot of exchanges that will open 4 a.m. You got to figure out, what your charting capabilities are as well. But for me, $18 here on BlackBerry. I know I really like the name. It was rocketing up. It was up 17 or 18% when we came in here, and it was 8 a.m. And I said, you know what? I got to get in. So I'm going to find a level. So we find an $18 level right here. And then when it breaks, we take the long. And then look what happens. This is really the difference. So there's a $1.50 win. I believe that when you're trading in the pre-market, just because of what Neil mentioned there, you have no idea what's going to happen on market open. Look at the market here. Opens and then tanks straight down, creating a losing position on this. I believe you need to scalp out as much as you can in the pre-market, taking advantage. So I go long 18. Look, my first out 18 quarters, my next out 18.50. Then I take another piece out at 19. And then we're lucky enough to get 19.50s, okay? And then it comes marching to the downside. So I think you can trade pre-market, take it to your advantage. There's less traders around, so you can get bigger moves, right? But again, it can reverse you the same way on the outside. You can get stuck holding the bag if you don't trade around key levels.
Sean, I want to come right back to that because it's a great chart to point out the difference in volume on the open versus in the pre-market. And I want to talk about that a little bit more. But first, it's one of those areas where we have to be very careful in the sense that if you are trading in the pre-market, obviously there are not that many people participating. And that means that the action is going to be a lot more volatile. There isn't going to be the liquidity that we discussed. But you are going to get opportunities like the one that you just pointed out there. But let's have a look at that chart again, because I want to talk about the amount of volume that comes in at the open versus what we saw in the pre-market. Yes, there was a lot of focus in the pre-market and the movement in the stock was going in one direction. But, the volume that comes in on the open can change things on a dime.
Yeah, and good, and I'm glad that we have this chart open because you can really see this here. We're cruising like 100,000 shares, maybe on a maximum here, into the open, and that's a lot of volume. Like that's the first thing. That's a lot of volume for a lot of these stocks. So you want to look at average daily volume. BlackBerry today 470 million, and we're not even done yet. But then here's the market on open trades, right? So once the market opens, you get like an 8 million share print. So bang to the upside right there. Or is that 800,000? I mean, 8 million, I guess. So right away, you could see the volume starting to come in here off the open. And look, I mean, this was a big buy candle here. So we open up at basically 19, and then we just start to rip up. I hold a little piece of this, right? So I'm out 25%, 50%, 75, and the final 100 right there. Hold a little bit, but then you can see the volume again starts to come back in at these highs, 2021, and then it starts to fade out. So this is a pre-market talk here. So I just want to give you guys information that you want to be able to see volumes kind of keeping elevated into the open. And I think that that's something that's very, very important. If you're involved here and all of a sudden the volume goes back down to these levels, then yeah, maybe there's not as much interest on your name and you could, put yourself, again, it's two-sided, right, Neil? Low volume gives you great opportunities on the winning side, but also the levels will start to disappear. And what you think is maybe a safe out, like for me getting long here at 18, my out would probably be right here, like 1769, 1770, based on where these past levels are. But when this market comes down there may not be size, so you're going to get slippage. So if you don't have volume, then the slippage could be greater than what you've anticipated. That's the risk, Neil, really, of pre-market trading.
And to double down on that, people talk about using stop orders, right? I control my losses by having a stop order. Well, in the open market after 9:30, better chance you're going to be able to get that trigger price and then not have the slippage that Sean mentioned. And I want to talk about some patterns here because this becomes an important point. One of the reasons you trade in the pre-market is because you want that volatility. You want those bigger moves. The less people trading, if it was a short trade here like there was in AMC, there's less buyers on the bid, so when it falls down, it'll move a little bit faster. But everyone's looking at the same patterns. And I'm going to illustrate this by look at the high of the day yesterday in AMC, 7260s. You then gap up and then hold this level, and then right at 7 o'clock, and 7 o'clock and 8 o'clock are two big times when a lot of retail platforms will allow trading in the pre-market. There's immediate profit taking through that level. If you had a stop through 7260, your slippage could be 2 to 3 times the size that it would be in the open market. So that counts for getting the position. That counts for if you were long trying to hold that level. So you've got to bake that into your expectations of risk management. Understand that all of your losses will be bigger. Sure, the upside's a heck of a lot greater. Look what happens. Look at the close and look in the aftermarket. This 6750 level, then suddenly, first level down, it holds just in front of it. Everyone is looking at these same basic patterns. It's not always as simple once the market opens up and you've got all of the institutions and all of the algos and all of the professional traders. Everybody's looking at the same thing. In the pre-market, you might get some obvious moves like this, and I will double down. Where does this move stop? Where is support form in the afternoon after the halt down in AMC on that particular day? Everyone's staring at this 50 level. That was a base of support on the way back up. Before it can even get there, we have a bounce off of that price. So people are buying in anticipation. If you're short, look for those types of trends. Look at previous days' action. A lot of times it is that simple. But you want to make sure, like Sean mentioned, there's volume. And one more thing. Make sure you're looking at the actual level too and not just the charts. During the open market like this, you can look at the chart and there's all the shares you can probably want on AMC. In the pre-market, don't assume when you're looking at this chart that if a level breaks, I'll get a fill there. Know it, see it. If you have 1,000 shares, is there only 100 shares at each level? Is there 500 shares? Is there a couple of thousand? That matters a heck of a lot more when you're trading in the pre-market, so extra caution. And some traders actually will refuse to use stop orders in the pre-market. And also, your broker might not even have market orders either, and that's with good reason because of those liquidity concerns.
So the next obvious point is going to be then, okay, so what do we need to see to immediately say, nope, not for me, I'm not going to touch it? When is it not a good idea whatsoever to take a trade in the pre-market? Let's talk about liquidity and volume here, guys. So even if, you know, a stock may have news or may have some sort of other catalyst that's moving it pre-market, what do we want to see or maybe not want to see to keep us out of a trade pre-market?
I'm not picking on Lemonade, but I mean, the second you say it, I know what stocks do volume in the pre-market and which ones don't, and I could care less what, like, most of the times what the news is on a stock like Lemonade. This is what you'll see on a 1 minute chart in the pre-market. I mean, very sporadic printing. You will go minutes. This is after 7 o'clock when a lot of retail comes in. You have minutes where there aren't even any executions, and at that, I mean, look, I pulled up volume for you to be able to see. This line here that doesn't get breached until the open is 5,000 shares. I mean, the biggest candle here is 2,300 shares, and that's one print at 8 o'clock. And by the way, at 8 o'clock, there's a block print of overnight trades that come through. So the majority of that wasn't even real. There's no liquidity whatsoever. There's no opportunity to get into a position. And here's the thing. If you can't scale a strategy, what is the point of developing it? So yeah, maybe you can get 10, 50 shares, 100 shares at a time, but you'd never on this stock be able to move a bit larger position. You'd never be certain about those levels once you had that large position. And when it's a no-fly zone, I'm telling you, it's easy to see because your chart looks like this and the volume is absolutely non-existent. And time again, I see Lemonade come up and because it's got percentage moves here or there, and you can't really do much of anything about it until 9:30.
So at the end of the day, you want to see volume, you want to see volatility, you want to absolutely understand why a stock is doing volume and maybe moving in the pre-market and understand why the directional move is happening first, and then make a decision on whether or not it makes sense to trade in the pre-market. Lots of information to digest there on pre-market trading, guys. Hope you like that one. Let's go to Valeria.
Hey guys, thank you for this great information. Dear viewers, please subscribe to this channel to see more videos.